Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Richard Kellam and CFO James Lorimer of Data Communications Management. Data Communications Management trades on the TSX under the symbol DCM and on the OTC under DGPIF. The company is trading at $1.30 with roughly 44 million shares outstanding, or about a $57 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. Yeah, great to have Richard and James with us today. Data Communications Management, a company that basically came on our radar screen probably about 6 months ago. Unfortunately, we weren't big shareholders or buyers of stock back 6 months ago. We wish we were, because the stock's done exceedingly well over the last little while. So we really appreciate you spending time with us today, and we want to understand what you guys do and what is driving the share price. Richard, I'll hand it over to you.
Okay, thanks, Paul and Trevor. Appreciate it, and good afternoon, everyone. Thanks for the opportunity to connect with everyone today and tell we call the new DCM story and why we're well positioned for growth. But before I get started, I want to flip to this next slide here, and James Lorimer, our CFO, who's on the line, says I need to do a little housekeeping before we get started, right? So during this call, I will be referencing some forward-looking statements, so please refer to our MD&A as filed on SEDAR for the disclaimer, and also this presentation, as well as a couple of videos I'm going to play for you today, will be up on our website, dcm.com. I'll repeat that later. And that'll be up after the call. Okay, so that's the housekeeping, the formalities. So I'm going to just flip into to the first slide here and sort of walk you through why DCM is well positioned for growth. I'm going to start down on the bottom slide in terms of who we are. We're the leading marketing and communications provider in Canada with over 1,000 employees. We've got operations across the country. And we serve, and you'll see that on my next slide, 250 enterprise corporate clients. And those 250 clients represent 93% of our revenue. Okay, and I'll bring a little bit of color to our client list on our next slide. So who we are as a business, I'm going to go across the center of this slide here. About 62% of our business is what we call kind of conventional print business. But it wouldn't be, kind of trade printing. It would be printing that has some level of complexity, and I'll give you, some of that detail, and you'll see some of that in a video I play for you later, right? So sort of a higher margin print flow versus your conventional commercial print. But 178 million of our revenue is done in this kind of conventional print. In the center bubble here, we've got roughly 32% of our business, so just over 80 million, that we call tech-enabled marketing workflow. So this is anything that flows through our organization that we're delivering through a digital stack. And again, I'm going to give you more details. We call DCM Flex. So this is tech-enabled marketing workflow, and that workflow would consist of 3 areas. One area here, which is the obvious, which is print on demand. So that would be, kind of automated. Think of a Vista print for enterprise. Anybody that is aware of a Vista print, we would be the Vista print for large enterprise organizations. We do a lot of business process outsourcing. A lot of that is in supply chain. So you think of financial institutions that have multiple branches. We need to automate that workflow or that supply chain out to those branches. So we manage that through our tech stack. And then we do a fair bit of what we call e-marketing solutions. Obviously a lot of marketing and communications move between physical to digital. So a fair bit of our business is moving into e-marketing solutions, direct mail, social, et cetera. Okay. And this final bubble over here, although a very small part of our business today, I'm going to talk this opportunity for you, is what we call digital asset management tech-enabled services. Okay, and again, I'm going to bring a lot more color to that bubble off to the side there in a minute. So our strategy is to move from print first to digital first. Not to say we're not going to do print, but we're going to start with delivering that print, that marketing, those marketing workflows, that digital marketing workflow through a digital first strategy. Now, I can tell you that the work we do in the center bubble here, this 32% of our business, it's $80 million in revenue. It's got much higher loyalty, much higher retention, generally longer term contracts, because this technology needs to be embedded into our enterprise clients' digital or tech stacks, and it's of higher margin as well. Okay, so it's really kind of a virtuous model here by moving our more conventional print into more of a digital service or digital enabled workflow. Okay, and then of course we're going to build this digital asset management solutioning out, and again I'm going to give you more details of that in a minute. So a quick look at our clients. I did reference that 250 clients represent 93% of our business. Well, we also serve over 2,500 clients across Canada and a few in the U.S. as well. 97% of our we have 97% retention of our enterprise clients. So, you know, a lot of loyalty in those 250 customer base, and about 70% of our revenue is longer term revenue, anywhere from 1 to 3 and even up to 5-year commitments, depending on the client. So about 182 million in revenue is tied up in longer term contracts. You know, and a big part of that, of course, is that, you know, that 80 million in digital, you know, a lot of that is in longer term delivery. If you look at our client list here and the verticals that we participate in, we participate across multiple verticals. About 24% of our business is in FI or financial, and you can see the clients that we work with here. A big piece of business in retail. We do, you know, a fair chunk of business, obviously, in healthcare. About 13-14% of our business in healthcare. I'm going to actually play a video and talk a little bit about emerging markets, but we've got a commanding position in labeling for cannabis. In fact, we have north of a 75% market share because of the digital capabilities we provide to simplify that workflow. You know, big chunk of business in healthcare, and you can see the other verticals we participate in, right? Quite a lot in government as well. So that's a pretty impressive client list, and you know, frankly, it's one of the reasons I joined the company a few months ago. You know, really powerful. This team has built up a pretty outstanding group of clients. You know, we're working with 70 of the top 100 corporations in Canada and 3 of the top 5, you know, government agencies. And there's not one client that represents more than 5 or 6% of our business as well. So we're certainly highly diversified. Okay. Now I'm going to take you through this center bubble first and kind of unpack this tech-enabled marketing workflow. And again, I've got a couple of videos to play that will bring, you know, will bring some color to it. Okay. So our embedded, so we're well embedded into digital clients' ecosystems. We've got a platform that we built called DCM Flex. DCM Flex Platform allows clients to do, you know, streamline their processes for ordering, for proofing, for approvals, for reporting, for regulatory compliance. So there's a lot of functionality that we've built into the platform depending on what the client needs are. The platform is fully customizable. So, you know, a lot of clients wouldn't know it as DCM Flex. It would be customized even and branded into their own, you know, kind of digital stack. We have over 100 active clients on the platform today, and that is growing. About 230,000 users annually are logging on to DCM Flex to manage their workflows. We have over 8,000 active users daily, and again, that number's growing quite considerably. And we process over 300,000 orders. The platform is built through a combination of proprietary software solutions that we've developed, again, to simplify and to solve those workflow issues for clients. And it also uses APIs or application program interfaces of best-in-class software, depending on what the client needs are. So that's the beautiful thing about this platform. It really is kind of a platform as a service. and it's highly customizable depending on the functionality and the needs of the client. Okay, and it really does simplify complexities of large enterprises. We like to say we love complexity, right? Complexity is our friend, because the more complex an enterprise, the more complex an organization, the more value we can bring to that enterprise or organization through our digital capabilities. Recently, we've been winning about 70% of RFPs, and I can tell you that almost all of that is due to technology. Of course, we need to be competitive in price, but you compare our margins relative to the industry, and we're quite a bit higher than the industry, because we've been bringing more than just price to the equation, right? We've been bringing technology, and 5 of the most recent wins, a couple of those include FIs, are 100% delivered through to the technology we're bringing to the client. Okay, so that's just a little bit of color on our DCM Flex platform. I'm going to play 2 videos for you. One is a video that shows what we do in FIs, and another one's what we do in cannabis. But you can imagine we do this in energy, we do it in retail, we do it in healthcare as well, right? So just a couple of simple examples to demonstrate the capabilities we bring to clients in those 2 verticals. Okay, so I'll play FI first.
DCM has supported enterprise print and asset management programs for 60 years. Today, DCM is Canada's largest B2B marketing solution provider. Together with advances in commercial print technology, our ability to streamline complex brand and regulatory workflows has made DCM the industry leader in the highly regulated FI vertical. DCM Flex is our content development and e-commerce platform for managing entire enterprise programs and assets. FIs can produce and distribute collateral on demand by location, region, or nationally. Users can easily customize and update branded assets. Regulatory and brand compliance are automated, ensuring regional accuracy and version control. Ordering is simple and seamless, whether it's a run of 10 or 10,000. Built-in and customized reporting generates decision-driving analytics. The top financial institutions in Canada trust DCM and represent the largest revenue segment in the company. DCM Flex saves our FI clients on average over 15% in both direct and indirect costs. We are continually investing in our enterprise solutions to meet the evolving needs of FIs, while expanding to support new category entrants like fintechs. With DCM Flex, they're tech-enabled.
Okay, I'll now play the cannabis example. And you can see how we use the same tech stack or digital platform to deliver a different use case for another vertical.
Cannabis cultivators trust DCM. 8 out of the top 10 in North America already work with us. They know that we know the cannabis terrain. Cannabis was legalized in Canada in 2018, with complex regulations. But drawing from our experience in other highly regulated industries, like finance and healthcare, we've built a robust solution that automates critical business functions. DCM Flex is our tech-enabled platform, a customized, secure interface for the cannabis industry. It automates complex workflows for region-specific compliance and tight version control. Built-in and customized reporting provides a single transparent view and management of all order information. Digital asset management means everything is accessible to those who need it. And the interface is fully customizable to each client. All with flexible manufacturing scale, from California to Cape Breton, from runs of 1,000 to 100,000. Today, DCM has over 75% market share of the cannabis labeling industry. Top cannabis producers choose DCM because DCM is driving measurable results. And we're in international markets like the UK and Germany. What's next? New states are legalizing cannabis every year. At a 16% compound annual growth rate, the North American industry is expected to reach $39 billion in sales by 2025. The fragmented U.S. market only increases regulatory complexity. DCM's partnerships and North American footprint position it perfectly to meet the growing U.S. demand. DCM Flex automates state-level versioning, simplifying the complex needs of the cannabis industry.
Okay, so what do they say? A picture equals a thousand words, and a video equals 10,000. So hopefully, I saved myself 10,000 words on those two videos, or 20,000, I guess, given it's two videos. So, so again, we do that. You know, good example of what we do for FI and in cannabis, and you know, we do the same thing, as I said, in healthcare and energy and in retail. So again, you know, today, 32% of our business is tech enabled. And the objective, you know, really is to drive that penetration so that we're up and over 75% of our business tech enabled by 2025. You can see how we plan to step that through 2022. I can tell you that I have a personal objective with the board. You know, one of my KPIs this year of 40%, and we're well on the way to deliver that in 2021. So I think 2022 will be a number that we easily beat. And as I referenced earlier, this is a higher loyalty, you know, higher retention, you know, higher margin, and generally a longer term, more kind of recurring revenue model. So hence the, you know, the importance of driving that penetration of our digital capability. And quite frankly, it continues to separate us, you know, from competitors in the industry. Okay. So that's the first story I wanted to tell you about where we're going with our tech enabled marketing workflow. The second is what we call our digital asset management tech-enabled service. Again, you know, a tiny business today because we've been thinking like a print-first company, not a digital-first company. But, you know, I can tell you that at DCM, we've been managing digital assets for over 40 years. We've been in business for 65 years, but 40 years ago, you know, the assets that we had to convert into print became digital, right? Prior to that, it used to be a physical asset. We convert to a physical asset, a printed asset. You know, 40 years ago, those became digital assets. So we had to upskill, right? Not a lot of people actually helping us because it's all new in the industry. So we had to build skills on how to manage digital assets. And we bring those skills to clients every single day. It's all part of our workflow. We wouldn't have a print business if we didn't know how to manage digital assets. So this is an opportunity to bring that skill to clients. And I'm going to first, just to level set, you know, all of us on the call today, I'm going to first explain what a digital asset management functionality is, and I'll take you, you know, through how we plan to how we plan to manage it here at DCM. I don't want to spend a lot of time on this, but you know, think of digital assets of anything from you know, file I'm using today, presentations, artwork, social posts, documents, videos, photos, anything that's either you know, kind of in development or finished artwork. They need to be archived somewhere. They need to be libraried somewhere, right? So they need to be preserved. A digital asset management solution is not putting images or digital files or digital assets into hard drives of employees' computers or even onto SharePoints, because if you put them onto SharePoints, they're not really scalable assets, okay? So they need to be uploaded and preserved, and then they need to be managed properly. Think if you're a large, complex enterprise with multiple divisions and multiple brands, you've got to manage version control of all those assets. You've got to be able to effectively tag those assets so that they can be found by users. And that's where there's a lot of technology that we've got on our platform using AI and machine learning that auto tags all the metadata that's in each one of the documents or each one of the photos or videos, et cetera, right? You need a regulatory and approval process. And then, of course, you need functionality to be able to take those assets and use them in your design, right? You know, you may have one asset that flows through 4 or 5 different designs. It could be used for, you know, a social design, a print design, and a broadcast design, right? And then, of course, once the assets are centralized and managed, you need a system to be able to convert those to media, to be able to distribute them. This is what we do today. As I mentioned, we know how to send an asset, manage an asset, and send it into print. And of course, we know how to send it into other, email and mobile and marketing services, right? So that's essentially what the functionality of a digital asset management platform is. As I said, we've been doing this for 40 years. We have not created a business around this, but this is where we're going in future. I'm going to talk about the size of the industry on the next slide. You can see it's a huge opportunity in the market. The market today is about a $5.2 billion market. Depending on what data source you look at, it's anywhere from 20 to 30% growth. And the reason it's growing is there are less than 1 in 10 large companies or companies in general that are actually using anything that resembles a digital asset management solution today. Sure, you've got companies that are using SharePoint sites, and you've got companies like one I worked for, right? A large multinational company. Their digital asset management platform were hard drives of associates around the world. So imagine if a marketer in Italy wanted to get a file from a marketer in the UK, they'd have to call them up and find out and discover what was available. So not a good scalable use of assets. The market actually plays very well to how we're positioned as a company. About 40% of the market is in North America, which is where our strength is, and then plays very well to kind of large enterprise. And as I said earlier, the bigger the enterprise, the more complexity, the more there's a need for an asset management platform, okay? And that's clearly, on target for us here at DCM. So why DCM? I already referenced that we've got 40 years of practical experience. So we're a black belt in terms of practitioners. We already manage thousands of digital assets for clients every single day. And currently, given that we've got 32% penetration or 32% of our business is tech enabled, we've got the right to play. We've got the practical experience and we've got the technical and digital experience to build a business around digital asset management solutioning. Opportunity is quite sizable. We're just starting into it. I've been here 3 months and, we discovered our way into this opportunity. We think it's somewhere between a $10 and a $20 million business in 2022. That will really size the future. But we easily believe it could be, well north of a $50 million business. We, put a range in here, 25 to 50 million, and this generally is a higher margin business than, your traditional, analog or print workflow. Okay. So it's a little bit of information on our tech-enabled digital asset management solutioning. So, before I jump into the numbers, you can see clearly see our strategy move from print first to digital first, and you'll hear a little bit more of that, before I close out today. Just looking at the numbers real quickly, because I think it's important that we put some context and some color to them. Up here on the top left is our revenue. You can see that in 2018, our revenue peaked at about 323 million. In 2019, we got hit by a pretty significant headwind due to ERP implementation. So, I've been involved in ERP implementations before in my prior life in the corporate world, and they're never easy. This probably wasn't one of the better ones I've seen. I've said to James a couple of times, I'm glad I wasn't here for it. But you know what? It's great to be here now because the systems are running great, and the amount of data and information we're extracting and the value that can bring to our business is significant. And then, if you look at 2020, we kind of had a double headwind here, right? Almost tornado, because we got hit by, after our ERP, kind of challenges, we got hit by COVID. And this was an industry thing, right? When you got a lot of business in FI and retail is essentially shut down, that's going to impact the industry, okay? But despite that, you can see over here, the team has done a great job building what I call a better business over time. And you can see that especially in margin. Gross margin was 22.7% in 2016. And you can see our latest 12 months were up to 28.7. So a full 6-point increase in gross margin. And as I say to James, gross margin is your best friend. And you can see it here in 2019, between 2019 and 2020, despite the headwinds we experienced, our overall cash margin increased because of that big increase in gross margin, okay? which obviously led to a strong adjusted EBITDA margin. We're at 16.6% latest 12 months, and a significant reduction in debt. So big focus on building a better business, and we're going to continue to focus on building a better business while we work to build a bigger business. Okay. So a little bit more detail on, just building on the last slide, on 2020, cash flow, you can see a significant improvement in cash flow. In fact, we were negative 800,000 in 2019 and positive 47.6 million in 2020. I already talked about margin. Just putting debt reduction in perspective, it was a 45% reduction in debt in 2020. And this theme around building a better business, we continue to drive hard on spans and layers and productivity improvement. And we reduced SG&A by 12% in 2020. So how have we started the year? In 2021, first quarter, our cash flow continues to be very strong, 10.6 million, up 8.6 million versus a year ago quarter. Our revenue in the quarter, if you compare it to other kind of in COVID quarters, remember, it's not a like for like quarter in quarter one because the economy didn't shut down in Canada until the end of March 2020, right? But if you compare it to our in COVID quarters, we're up 3%. So we're starting to see a little bit of tailwind, right? We're hoping for a lot more. Gross margin up over 30%. So remember the prior slide was 28.7. So we put in a strong gross margin quarter in quarter one. SG&A continues to decrease. We're operating at what I call NOG. So that's negative overhead growth. And we're going to continue to focus on NOG operating. You can see where we are on EBITDA, and our debt reduction in quarter one was a strong minus 7.2 million or 14.9% reduction in debt. So strong, a good solid year despite the headwinds we experienced as a result of COVID. Team focused hard on building a better business, and that's carried through in quarter one. Okay. Quick look at priorities moving forward, leadership and management priorities. Again, I talked about moving from a print first to a digital first company. Obviously going hard on digital innovation, and you saw that in the videos. And there's I can tell you right now, there's kind of more demand. There's a lot of demand among our tech team, from our commercial team right now. We're working hard and quickly to upskill our commercial teams so that they're highly skilled on digital, and really great progress there. I talked about our clients and the penetration of our platform and the digital asset management services we're going to lean into. On M&A, we will look at highly accretive consolidation opportunities if there's two things. One is, opportunity to drive synergy, and two is opportunity to drive our strategy, which is, tech enable any workflow that we could potentially purchase, right? So we will consider if there's some interesting targets out there, and we're also going to look at some seed capital opportunities in market technology. Okay, not huge plays, but if there's some small and interesting companies that we think we could get in at an early stage, we'll certainly consider that. From a global expansion, you saw the video. We're working hard to penetrate the U.S. market, cannabis market. Huge opportunity. We're off to a good start. And then we're going to look to expand our digital asset management services globally, and we'll do that through Canadian multinationals. The beautiful thing about digital is digital has no borders, right? You don't need to lay down, physical printed assets or printing assets. Okay. Here are the targets. We want to get our business back to north of 300 million. That's what we're focused on. We have active projects on that right now. And then sustain a 5% compound annual growth rate. Again, this theme around building a better business, increasing spans of control, reducing layers. I think I set a good example for the team. We took a layer out, before I joined. It was sort of a condition on joining, and we increased span considerably. I've got 12 people on our leadership team. That's up from 6 prior. Continue to drive hard on gross margins. We got a very active work plan to get us between 35 and 40, and of course that will spin out some positive EBITDA, well north of 18%. Okay. So that's those are our priorities. A quick look at this, and then I'm going to turn it over to James. Let's just spend a second on this chart up here that looks at our ownership. You can see that 54% of our shares, we've got a float of 50 million, 54% of our shares are held by what we would call or consider insiders. So directors, which includes myself, have 31% of the float. Our associates or employees have about 4%. And then we've obviously got some insiders and some key stakeholders here. So we got a lot of strong believers on the inside of the company that we're on the right track to deliver strong growth over time. Okay, I'm going to get James to talk the next one that's going to look at our capitalization and enterprise value. James?
Thanks, Rich. We've outlined a number of comparable companies here, and we've broken them into the three categories that Richard talked about earlier. From a conventional print solution providers, there's a number of companies here that we've included. On average, they traded about 7.2 times EBITDA. Probably our best direct comparable in there would be R.R. Donnelley, and you can see it's trading at 5.8 times EBITDA, which is really, it's a full 2 times or 2 turns more than we're trading. You can see us down at the bottom, we're trading at about 3.6 times, a little bit higher now with a little bit of appreciation we've seen in the last couple of days. As we expand our tech-enabled marketing workflow, and Richard talked about our aggressive plans to convert conventional print to tech-enabled marketing, the multiples there average 12 times, and we hope to ultimately, grow into an expanded multiple to reflect that value. And then likewise in the digital asset management and tech-enabled service provider market, you can see those are trading at pretty high EBITDA multiples. Probably the better multiple to look at there is a revenue multiple. And likewise, as that part of our business expands, we hope to get more credit for that kind of a part of our business in our overall multiple. You can see us at the bottom, we're trading at about 3.6 times EBITDA. And you can see our market cap, about $55 million, and our total enterprise value, including our pension liabilities and other lease comes to about $146 million.
Okay, thanks, James. Appreciate that. So this is my final slide, and I'm going to start off at the bottom here. If you took what James just took you through in the prior page, and you took our business today, just where we are today, and you used a blended multiple, we'd be somewhere between a value somewhere between 235 million and 345 million, and that 235 just takes a real conservative estimate on print multiple. So the implied share price would be somewhere between 280 and $5, right? So considerably higher than what we're seeing today, in our current share price. Okay, so strategy is very clear. We're going to go hard on building a tech-enabled marketing workflow organization, really accelerating our digital capabilities and our technology capabilities, and approaching clients with a digital-first solution. Of course, still delivering print and other marketing services solutions and business process outsourcing. And we're going to build a sizable business and solve a lot of problems for many of our enterprise clients today with regards to their digital assets, and certainly help them simplify the complexity and manage those assets for them. Okay, so that's our strategy on a page, and thanks for the opportunity to connect today, and look forward to any questions.
Fantastic, Richard. A great presentation. I appreciate that. I'll take this moment to remind everybody who's listening, we're going to ask Richard and James a number of questions. If you've got any questions yourselves that you want me to ask, just use the chat function that you'll see down below and rate your question. I'll do my best to ask it. Listen, this is your company is a company that has gone through a transformation, and if anything, the old school part of the business is masking really the engine that you guys have that's running pretty hot and heavy right now. Maybe give us a sense of over the last couple of years, what kind of growth are you seeing in that the tech-enabled piece of your business, and what does it look like going forward? As far as just continued growth, where do we go with that?
Well, in the industry is moving, depending on what you look at, for marketing technology, or tech-enabled services for marketing and communication solutions. Industries at the low end, 15%, at the high end, kind of 30-35%. You're seeing a big increase in spending, in marketing spending into, marketing technology, to help, kind of simplify or managing complexities. So the industry and the market is moving, very fast. I'd say because we've been thinking like a print company historically, right? We haven't moved as fast as the industry has, and that clearly is the opportunity for us, right? I started consulting for the company before I joined, and I spent a couple of months. My background, I was a CMO or head of marketing for large enterprises and worked around the world, 17, 18 years outside Canada. So the guys asked me to come in and spend a little time sort of looking under the hood and discovering opportunities within DCM. And the fact is, they've had this great technology solution that they've been bringing to clients, but it has not been marketed as well as it could, okay? Because we've been thinking like a printing company. It's our history and our heritage, right? And that's why companies often bring in consultants. They don't see what they don't see. They don't know what they don't know. That's why you bring a consultant in, right? So can I help discover this opportunity? And then we've been accelerating that since. And as said, we've got, a ton of demand now, internally and externally. So, our growth curve has not been kind of at the same curve as the market, but we know we can throw it onto that market growth curve.
Mm-hmm. I imagine, going from sort of a print style business to digital business, do you change the way you market and sell to your customers? What is your sort of sales approach now with this, new product, if you want to call it that?
Yeah, listen, it's a great question, right? Because the competencies required to successfully solve problems in digital versus, say, delivering a print solution are a different competency set. So we just actually went through a big process with our commercial team. We call our sales team the commercial team, which is what are the essential capabilities and competencies you need to be ready for today, and what do you need to be fit for the future? All right, and fit for the future are all digital. Okay, so we now have a very detailed sort of competency set. We know what we need to build for, and we know what we need to buy for. Because when we go to market and we recruit, we want to recruit for the future, right? We want people to be fit for the future. We can only recruit for the future if we know what it means to be fit for the future. So we've got a very structured, and again, it's experience I've had in my prior life working for large corporations. We have a very structured model now to both build and to buy these capabilities. But you're absolutely right. I mean, commercial leadership model is going to be different. And we're there to solve problems, right? We're not there just to deliver ink on paper. We have to solve a problem. And there's a lot of clients that have a lot of problems they're not even aware of, right? I can tell you that we've got some large FIs. We see how they're managing their digital assets today, because we're working with maybe 12 or 14 different departments. And it's crazy in terms of how they're managing it. In fact, we have to catch a lot of version issues that they have. Otherwise, there's going to be a huge kind of regulatory and, problems in that end product, right? So, the opportunity, because we have these great relationships, these, solid, well-entrenched relationships, we can actually start having those conversations and start solving those problems. But you're right. There's a commercial leadership model required there.
Mm-hmm. And then, as far as the different industries, you mentioned the cannabis industry, healthcare, financial services, things like that. I'd almost imagine the more sort of the newer the industry, the less, they're sort of more tech enabled already. It's these old school businesses that are still transitioning. Healthcare, I just imagine how much of a hurdle is to move that. But I mean, where are you seeing the biggest growth potential in terms of different sectors? Is it sort of the old school businesses, or is it the tech-enabled companies that fully understand what you guys are offering?
Yeah, I know it's a great question, right? I mean, there's a lot of problems to be solved with these large, organizations that have been around a long time. And I'll give you a simple example. Sort of a new one I discovered the other day. We're working with a large energy provider out in Western Canada, and they've got an operation in the US as well. And we provide a tech solution to that energy provider. And I asked the commercial leader, I said, well, how many SKUs, what do we manage in terms of SKUs for these guys? And we manage actually 1,300 SKUs. I was like, wow, that's a lot of SKUs. And I said, why are there so many? Well, there's simple things like, you've heard of lockout and tag out, right? If you're, managing a pipe, if you're managing a piece of equipment, you got to tag it out, and it's got to be recorded. And if it's not recorded properly and tagged out properly, there's massive fines they face. So you could be producing a SKU of 1, 2, or 5. And if they don't have it when they need it, then they're facing huge fines and regulatory and compliance issues, right? We manage that entire workflow through this digital solution, right? So that's an old school, organization or enterprise where we're delivering a technology solution to help them solve their problem, right? And the way things are moving today, just a kind of proliferation of that example, of new pieces of material that they need, just to keep pace with the market changes. We need to supply all that in a fluid way. Here's another example for you, right? Large financial institutions. Let's say you work in private wealth. I'm going to have my own clients, and I'm going to be prospecting new clients. A lot of that management of my existing clients and prospecting new clients is all digital today. Well, I can't spend time typing out 1,500 emails, right? I need an automated solution to be able to customize that communication. So that's how long have FIs been in business? Hundreds of years, right? So, a huge problem that we can solve, and we're solving today through digital and through technology. So the whole kind of customization side as well. So there's a lot of kind of helping companies reinvent processes or improve their processes and simplify the complexities that they have in their environments today.
Mm-hmm. Mm-hmm. Why don't we talk a little bit about competition? You did touch on that in the presentation a little bit, but where do you sit in terms of the Canadian market? Where do you sit in terms of the international market? What do you think you guys can do better than your competition, or where do you need to improve?
So I think if you look at conventional print, there's really only kind of one or two what we would call competitors in the industry for conventional print, that 178 million. There's a lot of small guys, of course, doing commercial print. The print industry is over a $9 billion industry. We do 178 million of it, right? So, but the ability to manage the complexity of that workflow of the print, even conventionally, there are a few competitors. We referenced our Donnelly, Transcontinental, and a couple of technologies. And then, we don't do a lot of trade print, but there's hundreds of little guys that do trade print out there. We don't compete in that because the margin is too low. So, but if you look at competitors that have the technology that we have, that center bubble, that tech-enabled capability to be able to simplify complexity and deliver that workflow, there's nobody that compares to us. And in fact, we've got some recent examples where we've got clients that have left us, that have come back to us because they couldn't get what they needed they may have gone for a lower price. It failed because it added complexity to their workflow. So they've come back to us. And, a couple of those recent wins I pointed on that slide were exactly that, right? Because, they don't have the technology or the digital capability to solve a problem. And then that last bubble on digital asset management solutioning, look, with an industry that's growing at between 20 and 30%, there's going to be a lot of players. And there are, right? There's, kind of 50, 60 software players in there today. But these are pure software as a service providers, okay? I want to, make it clear to everybody listening that, yes, we've got great technical and digital capabilities. But remember, what we have that they don't have is the practical experience. We've been managing assets for over 40 years. And if you're a large enterprise and you're gonna stand up a digital asset management solution, you cannot just download or use a software as a service off of a cloud, right? Because the complexity of implementing that to really get value from it, you're gonna need a practitioner to help you implement. And that's where we come in. We've got the technical experience and we've got the practical experience. So we think we've got a nice kind of differentiator in the marketplace.
Mm-hmm. Listen, I mean, the last year and a half has been obviously pretty chaotic and life-changing for a lot of businesses with COVID. What has COVID and the pandemic done to you guys? And then what has it done for you? Because I imagine, if anything, it's increased the rate of change as far as people moving to digital and less emphasis on physical product and more on digital. So what can you say to that? What's it done to you, and what's it done for you?
Well, let's start with what it's done for us. So certainly it's really driven the need for agility in our enterprise, right? You know, the market's changing every single, I mean, opening, closing, you know, and you know, just the dynamics of the marketplace and consumer movements and how consumer movements have changed. Remember, because we're in marketing and communication, we follow consumer movements, right? So being dynamic and managing that those dynamics of the marketplace, we've had to learn that, right? We're kind of a business that's been around for 65 years, right? So we've had to up our skills in that area. And, you know, even simple things like making changes to our operations as, you know, demand changes, right? That's being dynamic as well. And you saw the performance that we put in 2020. We wouldn't have been able to deliver that performance, that financial performance, if we didn't have the agility on supply chain too, right? So we've learned a lot about agility. And then in terms of what is the impact? I talked about the impact to the market, right? When you're a marketing and communication company, there's not one out there that hasn't been impacted, because again, consumer movements have changed so considerably. And we don't think that's long-term, by the way. You know, consumers will return to normal consumer behavior. Now, you know, sure, there'll be some changes in behavior. You know, shopping has changed a little bit, but there's still going to be physical retail. There's still going to be consumers that are going to be going out to retailers, you know, walking into branches, you know, going out to restaurants, right, and moving through the economy. So we think we're going to, you know, pick up some good tailwinds. You know, but we certainly learned, you know, about some of those changes, you know, in consumer movements, of course, you know, how they consume media, how they shop. That's all part of our kind of digital learning that we've incorporated into, you know, value we're bringing to our clients as well. So actually, we've learned a lot over the last year. I've learned a lot personally as well. I've learned a lot personally from a leadership standpoint, right? Leading through a crisis is very different than having, you know, people in your office every day as well, right? And I think our teams have learned as well. So we've learned a lot, you know, we've learned a lot as an enterprise about how to manage workflow remotely. And quite frankly, you know, we're going to be shutting down some of our regional offices because we don't need them in this new way of working, right? We've improved productivity, you know, through this virtual way of working. We haven't lost productivity, so there's a lot of learning. Great question, though.
Appreciate it. I mean, you're at the bleeding edge of what the industry is doing and what customers want. Give us a sense. Look out in the future, and what if anything, you know, new innovations or new trends do you expect are going to affect your business and your company? And like how do you take advantage of that? Like, I'm trying to get a sense of what sort of new innovations, product services wise, your company's going to look for in the future.
Well, I think the biggest one I've already stated, which is this whole digital asset management solutioning. You know, with more and more media becoming individualized and personalized, you know, that's a lot of assets that are being created for all of our business partners out there, and to be able to manage those things effectively. Think of the complexity. I mean, I started 100 years ago as a brand manager, right? And, you know, I think of the market today, you know, being a brand manager or being a head of marketing, and the complexity of what you face every day in the environment, and be able to manage through that complexity. You know, you need digital solutions to help you manage that. And that's why the marketing technology space is exploding. So, you know, keeping pace with that and providing that service, you know, that digital asset management service, we think that's going to be our anchor point. Inevitably, there'll be other services we can bolt on around that. You know, but we're really getting a strong foothold there, you know, given our expertise, our practical expertise, and our technology expertise. So we think that's a good runway for us. I mean, 1 in 10 companies using a digital asset management solution today, you know, market growing between 20 and 30%. That growth is not going to stop. That growth is going to continue as digital assets continue to explode and expand, and that's not going to change, right? The way we consume media has changed, and who knows what the next media platforms will be. Right. So, we think we've got a good, you know, kind of glide path and runway for a future.
Listen, I mean, you're spitting off a lot of cash. You do have some debt that you've been paying down. Give us a sense, you know, if this cash continues coming in like it is, how do you use that cash? And the second part of the question is, as far as your continued growth, what sort of resources are you lacking, if any? Where do you have to sort of dwell on?
Well, maybe I'll just give James an opportunity to speak up on the deployment, the cash we're generating and how we plan to deploy that, and then I can take on the second part of the question. Okay, James.
Perfect.
Sure. Our first priority is to continue to pay down debt. As Richard mentioned earlier, we paid down considerable amount of debt in 2020, returning us to kind of more normal levels. Through the balance of this year, to date, we've already paid down 7 million. We expect to continue to pay down debt through the balance of the year. So that's really kind of priority one. We'd love to get, kind of debt to EBITDA, well below kind of 1 times. And we think that'll help stabilize, just provide better stability as we start to invest in some of our digital capabilities. We really have the digital capabilities now. It's more of a commercialization strategy. So you're not going to be seeing a big burn rate on our commercial development of that. As Richard talked about, we really have, a strong enterprise client base. We've got a seat at the table given where we've been for many years with our top clients. So we'll, continue to really kind of drive commercialization. From a CapEx perspective, we're not spending a lot on our traditional kind of physical plant. Our CapEx this year will be probably about $1.5 million, and bulk of that is focused on our transition, moving our Mississauga site into our Brampton facility, and that's going to drive again, improved operational efficiencies. So you'll start to see that shift of physical plant investment increase in towards some of our digital initiatives.
Mm-hmm. Great, thanks, James. Why don't we turn in a little bit to some stock questions, and then we'll jump into some questions from the audience here. You mentioned insider ownership is over 50%. Can you give us a sense of the breakdown of the balance? Sort of, do you have institutional following? Is it mostly retail? Is it mostly Canadian investors? What can you tell us about the shareholder base?
Yeah, sure. We've got above and beyond that. We have some, kind of small cap institutional investors, a couple of them. Not a very broad institutional base. For quite a long time, our market cap has been under $35 million, so it's been hard to attract a following. Mm-hmm. As well, we've, given the high insider ownership, that has limited a little bit our liquidity, but we do have a very loyal, kind of long-standing shareholder basis that, has been with us in some cases through, the thick and thin. We're certainly seeing some new names come into our stock over the last couple of months, and we're taking a much more kind of active investor relations strategy than we have for the last 2 years. We were pretty much focused in 2020 on digging out from the ERP in 2019, and then COVID hit us. So we've been pretty quiet, but we're starting to get out and do a little bit more communications to the street.
Mm-hmm. You guys don't have any coverage right now from any institution or any investment banks, do you?
Not at the present time. We are working with a couple of firms, and we'd love to get some coverage, but stay tuned, I guess, for that.
Sure. And then I guess which typically follows up. Is there any sort of chance of an equity financing? Are you guys looking at possibly raising money to help facilitate any of your growth initiatives or pay down debt?
I think any capital would be in conjunction with an acquisition if we were to do an acquisition of meaningful size. Richard talked earlier a little bit about some of our objectives in terms of where we could see an acquisition, and it would have to be very accretive. It would have to really allow us to kind of leverage our tech capabilities to further, tech enable workflows of a target acquisition, or some smaller investments in, maybe some seed capital investments in some marketing technology teams, for example.
Mm-hmm. Okay, no, perfect. Well, listen, let's open it up to some questions. We do have some questions waiting here. So we'll start here. Richard, this one's for you. It says, Richard, what is your background in leading companies in growth and or transition? And what can you apply from your past expertise to drive growth at DCM?
Yeah, it's a great question. So my background is 36 years in consumer goods, a combination of mostly, packaged goods, although I was in automotive for a while as well. A big chunk of my career was at Mars Incorporated, private company, $40 billion private company. They bought Wrigley for $23 billion. So I actually worked at Wrigley for 7 years, but then I joined Mars, and then Mars bought Wrigley. So our worlds collided. So, 23 years of experience between Mars and Wrigley. And, I was there for post-merger integration, learned a lot about integrating companies, of course. So, and a big chunk of my career international. So I was president of the European pet care business for Mars, which is a $3.5 billion business across 16 European countries, lived in Hamburg, Germany for 5 years, ran their UK pet care business. So I had a good run with Mars. And then I did a little stint in automotive for a few years, about 4 years, as the senior vice president of global sales and marketing. And I also ran their emerging market business based in Dubai. So 62 markets out in emerging markets. So what can I bring? Look, I've worked in a lot of highly complex environments, right? Multiple countries, multiple brand lines, multiple factories. And, so I've learned a lot about, how to manage that workflow and how to simplify complexities across, large enterprises. And certainly, certainly I can bring that, to DCM, and hopefully James has seen some of that in the first, 90 days. I think we've got a clear strategy. Like literally, I'm not even at 100 days yet, and we've got a clear strategy. We have great alignment from a leadership team. So that's certainly something that I feel I can bring in. And then, of course, getting the best out of talent, really driving decision-making, accountability, responsibility, working as high-performing teams, driving engagement, you're really getting people to want to come to work every day versus feeling they have to come to work to collect a paycheck. And that's really important if you're going to drive performance of the company, right? You got to have great talent. And I can tell you that, look, we have excellent, incredible talent here at DCM. And I say that honestly, right? Remember, I've worked in large corporations around the world, and some of the best talent I've seen. And, I think as witnessed by the leadership team that I've assembled, I've got 12 people on the leadership team. All of them are from within, right? Promoted from within. And I didn't have to bring any of, people that I've, obviously worked with and valued. Most CEOs would bring, somebody or a couple people into to their organization. We obviously have a rock star CFO on the line today, and, really happy with our commercial teams, our operations teams, our HR teams, finance teams. So yeah, that's what I feel I can bring, the learning I have, the diversity of experience between large enterprises and multiple markets. So excellent question, though.
Fantastic, thank you. Okay, so this is in relation to the cannabis side of the business. Do U.S. peers for cannabis labeling have an existing strong foothold in the sector? And how do you break into the U.S.? What is a realistic percentage of the U.S. cannabis TAM labeling that DCM can obtain?
Great question, right? And we actually have two strategies for market penetration in the U.S. One is, call it our existing strategy that we deploy in Canada, where we come in with a tech solution. And again, 100% of the labels we produce in Canada are tech enabled, 100%. Nothing, is produced outside of our tech stack, right? So coming into the US and providing a technology solution to simplify that workflow, manage the regulatory environment. You saw in the video, we're all set up for multi-state regulations. And then obviously, deliver the print as well. And we've got a print partner. We can't do it in Canada. We have a partner as well. We don't have to lay down assets. So we got a partner that will help us on the print delivery. So we're kind of print agnostic, but we do have a partner. So that's one strategy. The second strategy is, if you're a multi-state operator and you're already working with a group of printers, right? A couple of print companies or a group of print companies, we'll be print agnostic. We'll come in and we'll help tech enable that print workflow for you. So we'll sell a technology service. We'll sell a digital service and solution. We're already having conversations with several clients out there. In fact, to the best of our knowledge, and we're hearing this from multi-state operators, there's no competitor that has what we've built, right? This platform that we built for multi-state regulatory and compliance and workflow. So 2 strategies, one with print, one without print. I'll tell you, the second one is a new strategy for us because we were thinking like a print company, but now we're thinking like a digital company. So let's be print agnostic, right? If they've got existing relationships, we'll tech enable those relationships, right? And that's good margin for us as well. So
yeah, fantastic.
Great question.
Yeah, absolutely. How much of your product is automated after the customer clicks buy?
Depends on, it really depends on the product. Okay. So that's a question we could spend an hour answering, but let's say you're doing a highly customized direct mail. You know, my example of a private wealth manager that wants to do a direct mail to 2,000 clients, that's fully automated. Okay. Like there's no human intervention, right? It automatically goes out. It's all designed and done, and it's fully automated. Let's say the same example, and it's flowing through to a pamphlet or to a flyer that needs to be distributed. Okay. That's automated to the press, but then there's going to be some human touch to get it, you know, from press to shelf and then distributed out. Okay. So it really depends on the, you know, on cannabis, it's fully automated right through to the press. Okay. So you press a button and it goes right into the queue, and then it's straight into the demand, you know, straight into the supply chain. Right. So it really depends on the use case of the product that we're producing.
No, great. And listen, thanks everyone for your questions. There's a number of facets of the business that seem to be functioning quite well and operating well. As investors, what are the best metrics for us to be watching to sort of understand that you guys are executing in your business? What should we look out for?
Yeah, you know, obviously you're going to want to see, like any investor, you're going to want to see some return to growth once the economy normalizes, right? You know, we've been talking about the headwinds we're in. So certainly watch out for us returning to, you know, when the economy sort of moves. Who knows? Let's hope we don't have a 4th or 5th or 6th lockdown. But once the economy returns to normal, you know, you should be looking for a healthy kind of return to revenue growth, because that's an indication of the client, you know, success and client penetration. The second, of course, you know, our margin. And, you know, I give you that range of 35 to 40 margin over the next couple of years, but, you know, continued margin increase, because that's a good indication of building a better business. At the same time, we build a bigger business. We don't want to build a bigger business without a better business. And a lot of that will come from mix. A lot of it will come from what we talked about, right? Tech enabling that workflow, leaning in hard on digital asset management solutioning. And I say the other thing you look at as well, and look, I'm fully committed to this, and, you know, certainly I got a lot of experience in creating better ways of working within companies. Certainly Mars is a real high performing company. So really looking at that SG&A line and making sure, you know, we're doing what we say, right? Which is we're going to drive hard on spans and layers, and that creates, you know, push decision making into the organization, create high performing teams. Do more with less, and that'll show up on that SG&A line. So we give that target of 18 to 20%. At 300 million, our SG&A right now is 57 million. If we get 300 million in revenue and we can continue to operate at negative overhead growth and get down to 53, 54 million in SG&A, we're at 18% SG&A. We'd be, you know, solid, you know, well, at the bottom of that range, right? So we've got clear strategies towards that. So yeah, those are what I'd be looking for as an investor, and certainly what we're committed to as a leadership team and committed to as an enterprise.
Fantastic. Listen, we've spent roughly an hour getting to know you guys, but is there any parting message that you want everybody to leave with? Is there anything that we sort of missed, or anything you just want to make sure that everybody walks away today knowing about DCM?
Yeah, you know, I'll close in saying hopefully our strategy is clear to everybody. We're going to move from a print first to a digital first company. I can tell you that conversations have accelerated considerably with our client base. There's more clients in our network today that are unaware of our digital capabilities versus aware of our capabilities, and hence the digital first versus print first. So we're going to see, you know, some good solid acceleration. You know, it may take a little bit of time till you see, you know, kind of full momentum, but I can tell you that demand has increased considerably with our tech team right now as a result of, have changing the conversations with our, with our clients out there. So we're excited about the future, and, thanks, for the opportunity to talk to everybody today. And, we hope as shareholders, you guys are excited about the future as well.
It's fantastic. If anybody wants more information, what's your website address?
Our website address is datacm.com, datacm.com, so datacommunications.com. And this presentation will be on the site in the news link, okay? So not in the investor link, it'll be in the news link, as well as the 2 videos. And we also did a nice little infographic of this presentation that is super shareable, right? Mm-hmm. So if you want to share it out to your network or share it to, other investors, then please feel free to share. But all that information is up on our website at datacm.com.
Fantastic. This has been great. So we've been speaking to CEO Richard Kellam, CFO James Lorimer with Data Communications Management, symbol DCM on the TSX exchange. Guys, I want to thank you so much for joining us today, and I'm certainly looking forward to future updates as you go.
Thanks, Paul. Thanks, everybody. Appreciate it.
Thank you.
All right. Bye now.
Okay. Bye now.